and I'll load up the Dixie for this. You had US inflation, UK inflation. You can see what's happening to the value of the US dollar by simply opening up something like the Dixie, the dollar index. Really, really weak push off this key 200 moving average. It hasn't provided much whatsoever. If you look at your weekly, you slammed into key support that we labeled much earlier on. Okay, you fell right to here. And I wasn't expecting to go for it very quickly whatsoever. It was quite strong. There's various layers of it. It's like a concrete floor, if you like. Even concrete breaks, believe it or not, if the steel ball dropped in it is hard enough. Um, but in any case, if you look at what has happened, two minor green candles, nothing much in the way of upside movement. You would think that if people were really, really ramming to buy the US dollar, you would have had a much harsher reaction probably to this first area of key resistance, which you can see on your daily. I'm labeling it now. So that would come right along here. You would have expected to hit that, but because you didn't, okay, and I got asked some really great questions as well that I'm going to go over. Because you didn't, and I'm just going to move this here. Don't forget, if you're just coming in, press the like button. A lot of people ask me, okay, well, we didn't see a massive reaction, so what should we do now? Well, if you look at this red candle, it's very, very full-bodied, okay? It's harshly moving to the downside, and this is telling you, that you've had nothing serious pulling you to the upside whatsoever, okay? You can see that just by looking at it and the fact that you're pushing straight down. So if you do break these lows, I wouldn't be shocked. Now, I probably would avoid buying it down here, okay, or at least not in a heavy size. I would avoid shorting it as well because you've already had your move from up here, took you all the way down, reading of about 105 to 104, okay, a good chunk. Instead, what I prefer with this is I wouldn't be really shocked at all if you have a little bit more of a trickle down lower, over to your key moving averages underneath. Okay, that's your 40 and your 100. You've got key tech zones to the long side here, which I like as well. Okay. By the way, if you want to look at anything else, put it in the chat box. I will be going over gold, etc. Rita's Academy member of mine, great to see you. If you've got any questions or charts you want to look at, let me know as well. So, in other words, I think given the early price action that you've seen, early price rejection, it's not showing you that we're pushing up yet. I think you may trickle slightly lower and get onto your 200 MA. That's a really key tech zone for me. I like that a lot. You've got key support, okay, or key price rejection, historical price rejection, and it would bring you under this low, and of course to your 200 MA. So reflecting that on your dollar charts, pound dollar chart, euro dollar, things like that. And I did say this before, but I think you've got more meaningful resistance slightly above where you are on here as well. So if you haven't shorted this yet, I would probably just hold off. I think you'll probably get back over. Again, you can see that pullback is weak. That pullback is also weak. So there isn't this strong south side bias or market sentiment pulling you straight down. It's telling you something. It's screaming at you. It's saying, look, okay, we've had it short slightly. We didn't like it on the fall and we're coming back up. It's important at these points just to take your hands off. Okay, sit on your hands if you can. Put them under your backside. It's okay to do that because again, you're seeing very, very early rejection and a re-push up. That gives you the opportunity to have a light short entry. I'm not saying it's a long. You could light short it, but just based on that current price action, I would prefer it slightly higher because you've got much more weight for a downside movement, a better case for a downside movement if you do get slightly higher because there's stronger levels of price rejection and resistance. And if there's a stronger level of price rejection and resistance, naturally the probability of the market moving the way you want to the south side, it grows. Okay, if you had a weak level, then it doesn't. The kind of weak level I'm describing is what you can see on the dollar index now if you go on your daily. Okay, that is clearly a weak level of price action, and the reason why it's a weak level of price action is because it's done nothing. Okay, it has to be weak. There can't be buying power there if it's only gone thus far. Okay, markets are all about solving the puzzle, okay? I mean, you don't necessarily have to be a good puzzle solver. You don't have to watch Miss Marple or whatever, Agatha Christie. You just need to use the information that you can see. Okay, so what you can see going on needs to be the basis for your future assumption. If you're looking at a bounce here and it's hardly done anything, this immediate candle is red. It doesn't mean you need to get short. It doesn't mean you sell. Okay, you should have sold up here. Or if the price retraces, you might consider selling up here. But down here, there's no market value. I do think it will go lower, but I would rather just not sell it and just hold off until you can buy it, okay? Because you will get better market value. And like I said, stronger levels of resistance, natural market probability, okay? So the dollar is a long, okay? Euro dollar therefore a short. If I'm looking at longer term markets, slightly higher than we are now. I like it over here. I like it nearer your higher key moving averages, so that's your 40 and 100. You can see you're way, way, way off your 200 MA, but that for me is very much ideal as a tech short zone further. So if you didn't like the first level I just spoke about, slightly higher than where you are, although it, I think it's quite ideal. You could hold off for long-term risk-averse shorts, which basically means you're waiting for a better price. The higher the market is, the more profit margin you've got because there's a larger amount of room to fall. Okay. If you do get above this previous high, wouldn't shock me at all. That US inflation data is deterring people from investing in US dollars. And the fact that if the global market economy and also the Middle East tensions calm down, people aren't so worried anymore and they don't want to buy their dollars. So you can see it's ideal as a tech short zone higher up, okay? And if you did want a future entry, I would just give it a little bit of space, slightly higher than the previous high, because you haven't got that immediate reaction fall. You could take a little bit of a light entry, tiny light short, but really I'm more interested just over 109. If I swap to the pound dollar, okay, it looks slightly different. So it's worth going over this. You can see that you are finding rejection as this market has fallen. This candle wick here has come slightly under the previous one. So it's a very steady, slow fall. I like it to the long side, okay? I think you're going to find weight in this area there. And if not, maybe this one, okay? But I just don't think that I don't think it's done yet like your other pairs. I think you've got much more reasonable levels of price rejection higher up. Okay, it's come to those key MAs, it's fallen straight away. I would just give it a bit of room to the upside. If you're going to buy it, make it light, okay? Because it hasn't got an amazing long case based on higher time frames. The fall isn't really, really good, in other words. But you have had considerable rejection. So if you did buy it there, then well done. Okay, that's great. I would probably need, if I was going to relong it, I wouldn't buy it now. It would need to come down something like this. Failing that, I would rather just have it long around here. You'll notice, and this is what I mean, when people ask me in regards to do I use the DXY to compare with other charts and do all this stuff, it makes you more confused, because we're talking about getting long on the pound dollar and short on the euro dollar. Now you shouldn't do this, you shouldn't do that at the exact same time because you're trading against yourself essentially. If you're buying $1 pair and shorting the other in the same instance, you are trading against yourself more or less. So pick one, is what I would say. But if you're comparing the Dixie and then getting confused because you're looking at the pound dollar, that has a lesser weight than the euro dollar, although they have a general assumption between them, you are just adding more things to the pot to worry about. So I wouldn't be shocked if you get pullback on your lower time frames. But if you are going to buy your pound dollar, I would just do it lightly on a dip back 1, 2, 3, 3, 5, because at the moment you've already had an up move. You can see there's very early rejection. If you do find it comes down like that, it wouldn't shock me. Okay, so you could have a scalp short. Effectively, that would be in line with your euro dollar and your DXY. So I prefer it long near these 200 MAs. That would sacrifice pretty much everything you got from the US inflation data. It's worth noting as well that the UK inflation data has come out as well. So that's why there's a skew in the price between the euro dollar and the pound dollar and the Dixie, right? And that's why it looks like a mess. I would give it a minute to move itself, to shape out, find where it wants to go. There's no rush with this whatsoever, but I wouldn't be shocked if you continue this very slight trend. Okay, it's been very slow, and it's just because there isn't this massive direction within it. Okay, you don't have strength for either case really, because both the inflation figures are very meaningful. But you can see there's early price rejection there. So in short, anything lower I would get long, but don't short the euro and buy the pound at the exact same time. I did do a post on New Zealand dollar, so you can watch that on my profile. In regards to the AUD, which I think a lot of people are interested in, again, like your euro dollar and your Dixie, you've got minor areas for shorts, so you could perhaps consider that now. But if you are wanting a more meaningful risk averse entry, again, why not just let it get above this high if it gets there and reshort? With the AUD, it actually comes very much in line on your weekly, which is quite helpful, with your key 40 MA. That also aligns with various areas of price action slash resistance. So given that that is the case, I would rather short it at areas of higher probability to the top side. We know with very strong downtrends, this is a common theme, but it just adds to the technical bias if you're coming within your 20 and 40 MA. It just so happens that it aligns with various levels, even here and beyond, price rejection. Okay, so if you're a risk averse trader, just hold off, like your euro, let it get slightly above the previous high. If this trajectory continues, I wouldn't be surprised because it's quite different. You know, the Australia hasn't just released its figures like the Bank of England. So you've still got this bias where people are dumping their dollars. Okay, so I wouldn't be shocked if you get slightly higher. The reason why I do all this and say all this is to stop people shorting too early. Okay, that is a short now, but it's not standard short. Okay, it's not a normal short. It's a bit of a different scenario. So just be careful with it. Any shorts really are going to have to be very light in that regard, because if you short it too heavily, you're going to end up with problems given it's already fallen. New Zealand dollar is the same on the near term, and I would expect absolutely the same on the longer term. If you get slightly above that previous high, you come into these key levels. Remember what I said about the concrete floor? You can imagine now a very, very hard ceiling. Okay, you don't want to bang your head on it. You don't want to jump on the trampoline and hit into something like that. But if you're short, I would say you probably do want to jump on the trampoline. Okay, you had price rejection here, you had it here, the price comes to the same level again, and you have the choice. That's why we looked at it short, and it comes straight away now. Don't think it's done moving up. In the same regard as the AUD dollar, I think you've still got sentiment to the upside, the downside for the dollar, like we just looked at on the Dixie. So any future shorts probably 0.609. If you are just